This year's Greenbook contains a number of suggestions for income tax that were also listed in last year's Greenbook and the Build Back Better Act (BBBA). However, they have not received enough support in the Senate to be passed. If these suggestions are now accepted by Congress and enacted as law, it would have a significant impact on the income tax situation of individuals, international assignees, and U.S. investors. The proposals in detail. The following proposals for income tax would generally apply for tax years after December 31, 2022. The top rate for income tax is proposed to be raised from 37% back to the previous rate of 39.6% for taxable income over $450,000 for married and jointly filed individuals. For single individuals, the limit is $400,000. For head of household filing, it is $425,000, and for married and separately filed individuals, it is $225,000. Taxpayers with taxable income over $1 million should pay long-term capital gains and qualified dividends at their individual tax rate. However, this only applies if the income exceeds $1 million for married or $500,000 for single taxpayers when adjusted for inflation after 2023. Realized gains and received dividends below this amount would fall on or after the date of adoption. It is planned to treat the transfer of appreciated assets through gift or death as a realization event. Donors or deceased would realize a capital gain at the time of transfer. The proposal would apply to gains from property transferred as gifts and to gains from property owned by individuals who died after December 31, 2022. This would also apply to property existing on January 1, 2023 owned by trusts, partnerships, and other non-corporate entities. A minimum tax of 20% on total income, including unrealized capital gains, is also planned for all taxpayers with net worth over $100 million. Carried interest is proposed to be treated as ordinary income for partners with taxable income from all sources over $400,000. The deferral of Internal Revenue Code Section 1031 like-kind exchanges for taxpayers with gains exceeding $500,000, $1 million for married, jointly filed individuals is proposed to be terminated. Another proposal concerns the adjustment of the recapture rules. Capital gains on certain real estate are to be increased by the amount of depreciation allowed or allowable. It is also planned to repeal the exclusion of gain on the sale of a personal residence. Mandatory reporting is proposed for foreign digital asset accounts. It is proposed to extend the tax return period to 3 years after the filing of Form 8854. Stay tuned for more news and content. Don't forget to like and subscribe.